Alright guys, good evening. Alright, Kayong here, really excited to have you guys together with us in this webinar, right? And really thank you OctaFX for giving me this opportunity to reach out to more of you and to share with you my know-how, right? Really excited to be here with you guys. Now I will be monitoring your questions as well, okay? But we do have a segment on Q&A at the end of this webinar. Okay, so I will be sharing with you first. So at the start, right, keep your questions to yourself because I won't be able to monitor it. But at the end of the webinar, when we come to Q&A session, that's where you want to put your questions, and then we'll have that time to actually answer all the questions that you guys have. Okay, so today webinar over here is the first part series. Okay, so we're gonna do a total of 4 episodes to give you a very holistic and comprehensive understanding of the Forex currency market. Okay, and this to me is very important, and I call it the 4 trading pillars. Okay, so today we're going to talk about the very first one, which is fundamental analysis. Okay, this is one of the topic where many traders actually ignore because they feel that it's very difficult. Okay, but today I want to share with you, actually, if you understand all these principles, it's gonna be very easy. Okay, and it's at the same time it's a very powerful analysis to help you in your trading as well. Okay, so again, a quick shout out to OctaFX. If you haven't done so, this webinar is actually sponsored by them. Okay, so you need to if you haven't to, right, do go to their Facebook page, their Instagram page, like their page and follow their Instagram. And of course, today they also have exclusive bonuses for you guys who attended this particular webinar. Okay, so they also have the fan pack, right? So at the end of this webinar, before we conclude it, there's a Q&A session. Okay, so what's gonna happen is we're gonna just pick one of you, okay, that actually asked very good questions that I believe will be able to benefit the community, the audience over here. Okay, and then you'll be able to win that fan pack, and OctaFX will send this to you. Okay, so that's for OctaFX, right? Now, a very quick one before we go into the topic. I'd like to quickly do a very fast introduction about myself. I feel that this is so important because you need to at least know who is Kayong, right? Or who is this speaker here sharing with you. Okay, so a quick one is I started trading back in 2012. Okay, and since then I've been doing this since 2015. In fact, right, I have already been full-time trading and investing in the financial market. And to me, that is one of the most powerful vehicle to achieve your financial independence. Okay, so I feel that this is very important to share with you a little bit about my background, so that you know, right, everything that I share with you today are things that are not just based on theory, okay, but they're actually based on practical steps that I personally use to trade and invest in the market, and they are gonna be able to help you as well. Okay, so these are just some of the photos that I've done, various sharings across Southeast Asia, and I think it's very important to also show you some of my result. Okay, from 2019, of course, to this year 2020. Okay, I feel again this is very important because I want to be as transparent with all of you because you decided to invest time with us in this webinar. I want to make sure that you know what is the real deal, what is real in trading. Okay, so this is my result in 2019. It was a fairly easy year trading in 2019, right? So you can see, if you just roughly sum it up, that year I made about 40 to 50% return. Okay, but this year itself, this is 2020. You can see it's not that straightforward. Okay, it's not gonna be like every month sure make money. In trading there will be ups and downs, and of course you can see over here this year result is a little bit more challenging, especially during the beginning of the first half of the year. Okay, but so far so good as of now. Okay, and of course, uh, what I do, I also invest in the stock and trade in the stock market. Okay, and this is 2020 result. Okay, so that's a very quick one about myself. Of course, the focus today is not me, right? It's you guys. But I want to quickly share all this so that you know, okay, what you're gonna pick up, what you're gonna learn today are things that I personally put in the financial market to achieve all this result. Okay, so now a very quick overview so that all of you understand the big picture of this 4 webinars that we're going to conduct. Okay, we call it the 4 trading pillars. That's why you have 4 webinars. Okay, and each of this webinar we're going to touch on one specific pillar. Okay, because in one webinar, if you want to cover everything, it will be too little time for me to do that. Okay, so what we've done is we break it into 4. So today we're going to talk about fundamental macro. Okay, the next webinar we're going to talk about sentiment, followed by technical, and of course risk management. Okay, so if you combine these 4 pillars here, That's where you have a very comprehensive understanding of the currency market. Okay, and when you use these 4 pillars, you have a holistic strategy. You go and approach and trade the market. At least you know what you are doing. Okay, so let's begin with the macro part. Okay, which is the fundamental analysis, right? So a lot of people get confused as to, like, they think that fundamental analysis is all about trading the news. Okay, it's not. Okay, news is part of it, but I want you to know that if today you want to understand fundamental analysis, which is the big picture of what moved the currency market, it's more than just your NFP, right? It's more than just an individual news. So in this macro analysis, fundamental analysis, there are few parties involved, or few components that you need to make, you need to be familiar with. Okay, the first part here is of course central bank. Okay, every countries or every country will have a central bank. Okay, so for example, Malaysia, we have Bank Negara, right? So that's our central bank. If you're based in Singapore, then of course the Singapore Central Bank is MAS, Monetary Authority of Singapore. And of course, if you have a little bit of macro and fundamental know-how, you know that in the US, okay, when you trade USD, right, in the US, the central bank is the Federal Reserve. And of course, in the Euro, you have like ECB, right, European Central Bank. So each country would have a central bank. Okay, so today we're gonna dive a little bit into what is the central bank role, understanding what are some of the things, the tools that the central bank can use. Okay, because that itself will affect the currency market. Okay, then the second component we're going to talk about is economic indicators. Okay, so if you just imagine a little bit, right? Central bank are like your, in school, right? Let's say central bank are like your teacher, right, or principal. Okay, and for them to assess your performance as a student, whether are you doing good, or you need more tuition, you need more help, right? How do they assess that? They actually need some form of indicators, right? In school, of course, that's where you have tests, you have exam, okay, you have homework. So in terms of central bank, right, fundamental analysis, then economic indicators is kind of like telling these banks how the economy is doing. Then from there, the central bank needs to intervene, right? So as traders, what we want to do is the last component, making sense of the economic indicators, understanding how this economic indicators is going to affect the central bank decision. Okay, so from this whole process here, that's where when you have this understanding, you realize that fundamental analysis is actually not that difficult. In fact, it's actually a very simple process to understand it, but yet at the same time, it's very important. Okay, so let me give you an overview, okay, of the 8 major central banks. So as currency traders, what we do is we focus on the major currency. Okay, so you have the dollar, which is the Federal Reserve over here. Okay, so in short, we call it the Fed, right? FED. Your Japanese currency, right? That's your Bank of Japan, BOJ, and then pound, you have of course Bank of England, BOE. Okay, euro is your European Central Bank, ECB. Okay, Swiss franc is of course SNB, Swiss National Bank. New Zealand is RBNZ, Australia is RBA, and of course the last one here, Canadian, is Bank of Canada. Okay, so every country will have a central bank, but again, we don't trade all currency, right? So we only focus on the currency that we trade, which is mainly really this 8. Okay, so your role actually is not that difficult. Okay, you really need to just be aware and understand like what are these 8 central bank doing. Okay, so these are the banks that you need to take note of. Okay, and over here you want to know that all banks, okay, these 8 banks, all of these 8 banks, they only have really this few objective. Okay, so this is like their KPI, right? They need to make sure that these objectives are being met. Okay, so this objective here again is not complicated. The main two one that all of you should really know, or I would say remember, is that the first one is we call price stability or inflation rate target. Okay, so over here, some of you might not fully understand what is inflation. Okay, so I'll quickly, in a very simple way, explain that to you. Okay, so if you take a look at our day-to-day life, right? 10 years ago, a cup of coffee ice, okay, at a kopitiam, right? A cup of coffee ice, maybe, with 1 ringgit 50 cents, maybe you can buy it. But today, any coffee shop will sell you a cup of iced coffee, maybe about 2 ringgit 250. Okay, so that increment in price from last time 150 10 years ago to today 250, that increment in price is called inflation. Okay, so you might think that, oh, then inflation is bad, it's not good. Not true. Okay, for the entire economy to grow, you need to have inflation. Okay, but at the same time, you of course cannot have too high inflation rate. Then that will become like hyperinflation, right? So you need to balance it. Okay, so imagine now you put yourself in the role of a central bank, and you need to ensure that this inflation is healthy. Okay, so what is this target? If you have a pen and paper, I want you to write this down as well. Okay, the inflation rate target for most of this bank here is about 2%. Okay, so what does this mean is that every year on average, they want the prices of goods and services in the economy to grow by about 2%. Okay, now of course, if you take a look at what's happening in 2020, okay, which is this year, right? We have COVID, we have lockdown, all businesses are affected, all economy is affected. That's where your inflation for 2020 is likely gonna fall. Okay, which means that the whole economy is not doing good. Okay, so that's the idea of inflation. So every bank would have a target of about 2% inflation rate. Okay, the second objective, the next KPI, only two KPI, right? The second KPI over here for central bank is that they need to ensure that the people are being employed. Okay, the people need to work. Okay, so that's the employment rate. Okay, so they need to make sure that people are being employed. So again, I want you today to put yourself in the role of a central bank, right? Really just two KPI you need to remember. One, inflation, which means your economy needs to grow. Second thing is employment. Your people needs to work. Okay, so these are the two objectives that all banks needs to hit, and they need to have to make sure this KPI is being met. Okay, now over here, of course, later we'll go through one case study of a central bank to show you that all this mandate, all this KPI can be found inside it. Okay, so this one here is just a very quick example to screenshot. Later we'll walk into share with you guys, right, a case study on the Federal Reserve, the US Central Bank. Okay, so you have a very clear understanding of how all these things that we talk about is being applied. Okay, so that's very important. Okay, but all this again can be found in the rate statement. I'll show you where you can get it. Okay, so now for those of you who maybe would like to understand a little bit more in terms of like why the economy sometimes will be good, sometimes will be bad, right? So if you take a look at 2020, we are in a recession. Okay, globally, every economy is not good, is in a recession. So when the economy is too bad, too weak, we're gonna fall into recession. It's not good, right? But if the economy is too healthy, too strong, okay, not good also, because then what you have is here what I say, hyperinflation. Okay, so hyperinflation, then who will suffer? The people will suffer, because imagine today your cup of coffee is 2 ringgit. Then 1 week later, because of hyperinflation, you go to the same coffee shop, right? 7 days later, that coffee becomes 250. Another week later, it becomes 3 ringgit, and then another week later, it becomes 5 ringgit. Okay, what will happen? People will panic. Okay, so you cannot have that happening. So the role of the central bank again is to make sure that it's balanced. Okay, cannot be too strong, cannot be too weak. Right, so that's the idea of it. So with that, okay, put yourself again in the role of a central bank, right? So now you have a target, you have a KPI. You need to have certain tools to help you achieve your KPI. Okay, so in the central bank world, there's only 3 things that they can use. Only these 3. That's why I say once you understand, it's very easy. Okay, these are the only 3 things they can use, at least for now, right? Maybe 10 years later, they might invent something new. But for the past, don't know how many years when there's a central bank until now, okay, these are the only 3 things you need to know. Okay, these are the only 3 things that the central bank can do. The first one here you can see is called interest rate. Okay, so as a bank, of course, you can increase the interest rate, you can also lower the interest rate. Now, if you take a look at what Bank Negara has been doing for this entire year, since actually the beginning in March, right? Bank Negara has been lowering our interest rate. Okay, if you're in Singapore, MAS has also probably done that already. Okay, so as a bank, as a central bank, you can play around with your interest rate. Okay, so in the next slide, I'll share with you how does the interest rate gonna affect your currency. Okay, but at this moment, understand that this is one of the part that a central bank can actually play around with. The second tool is over here. You can see I put it as quantitative easing. In short, that's called QE. Okay, in a more simple understanding of it, is basically printing money. Okay, so literally, I want you to imagine, right? In the bank, the central bank, they have like this printing machine that they can really print money. Okay, it's literally printing money. And of course, the opposite of printing money is where they can do this called tightening. Okay, tightening, which means that they collect back the money. Okay, so again, if you actually are aware of what happening in 2020, a lot of the banks are printing money. Okay, so I'll explain a little bit why, as we move forward, why banks are printing money right now. Okay, and the third tool here is called language. Okay, so language basically means that a central banker, okay, can come out to the public, to the news, to the media, and just decide to say something. Okay, so whatever they say is going to affect the market as well. So this is actually one powerful tool that the central banker can use. Okay, so just remember three things central bank can use: interest rate, print money, language. Okay, so now with that, okay, how do we know what are the banks doing? Okay, do we need to go and monitor what the banks are doing every day, every week? The answer is no. Okay, all you really need to do as a trader is to understand and read into all these bank meetings once a month. Okay, once a month, and that's more than enough. Okay, because every month the bank would have a meeting. Okay, sometimes some banks maybe 6 weeks once, or even 3 months once. Okay, so again, it's not something you need to do it every day, every week, but it's very important that you need to understand what the banks are doing, because that's gonna guide your currency, right? So generally, you can see over here, right? If the bank increases its interest rate, the currency tends to strengthen. Okay, I'll explain why as well. Okay, so you understand the big picture. Now, of course, opposite, if that the central bank reduces the interest rate, the currency tends to weaken. Okay, so raise rate, currency strengthen; drop rate, currency weakens. Okay, so this here, okay, if you're in front of your computer, laptop, you might want to take a screenshot of this as well, or take a photo of it, because this is a very good summary of the economic chain effect and how the economy is going to affect your currency. Okay, now I want you to follow me on this so that you understand what I mean. Okay, now let's all start with the top left corner, okay, where I put that here, better economy. Okay, so I want you to imagine like the economy right now is doing very good. Okay, so we start off with better economy. Now when the economy is good, means businesses are good. Okay, they are expanding. Businesses are gonna employ more people. More people are gonna have jobs. They are gonna have higher increment of salary. Okay, so that's where the higher employment rate goes. And when people are paid more, they have bonuses, their salary increase, they are happy. Then what will likely people do? They'll go and increase their spending, right? They're gonna buy more stuff to kind of enjoy themselves. So spending is gonna be increased. Okay, now when everyone starts to spend money in the economy, what will happen? Okay, all the prices will start to increase, right? Because if I'm a business owner and my business is very good, then I'll be thinking along the line that, well, now I can increase my price and I can still make more money. Okay, so if every businesses does that, then inflation starts to go up. Okay, so that's why you can see the next cycle here is inflation rises. Now, if this starts to happen, and as a central bank, I don't control this, then what will happen? Every people starts to increase price, then again, back to your coffee, right? Today 250, tomorrow 3, the next day 5, and then 10 ringgit. Okay, then everyone will suffer. So there's this fear of overspending and hyperinflation. So the bank, right now, I have KPI. I need to come in and ensure that inflation, again, is controlled. 2%, right? Inflation is controlled. So I need to use some of the tools that I have. Okay. So what will happen? Central bank will increase interest rate. Okay. So now, over here, I want you to understand why when central bank increase interest rate, the currency will increase in value also. Okay. Now, there are few roles that I want you to imagine yourself. Okay. Now I want you to imagine yourself as an investor. Okay, as an investor. So I am the central bank, you are the investor. Now, if today my interest rate is very high. Okay, what does it mean to you as an investor? Which means that if today you put money in my bank, I'm gonna pay you a much higher interest rate. So it's beneficial for you. So as an investor, you would want to put money in my bank, and therefore you need to buy or you need to exchange my currency, right? So if there's a lot of investor who wants to put money in my bank and they want to get hold of my currency, the demand of my currency will go up. When my demand of my currency goes up, my currency value also goes up. Okay, so that's the relationship, right? Hope you can understand that. So when central bank, I increase my interest rate, right? What will happen? For businesses, they will think that, oh, now if I borrow money from the bank, more expensive, right? Because I need to pay higher interest. And what will happen? They will spend less. Okay? They will not anyhow spend anymore. And then economy will start to slow down. Okay, so you can start to see the cycle already, right? So if economy start to slow down, what will happen? As a bank, I'm gonna be afraid also. If everyone don't spend money, what will happen? Recession, like what we are actually expecting now, right? All the businesses can't run. No people is going out. People are afraid of spending. They need to save up. That's where the economy drops, goes into recession. So as a central bank, again, I need to come in. So what I need to do, I need to actually lower the interest rate so that people can now spend more because the cost is lower. At the same time, I'm going to print a lot of money. Okay. So if you realize what the government is doing, the government is also helping the people by giving them money, right? So where does this money come from? The money comes from the central bank. Okay. So when that happens, okay, people will start to spend a little bit more, businesses start to spend more. It will hopefully help the currency, the economy to go back up. Okay, so you can see this whole entire cycle repeats itself over and over again. Usually, one full cycle like this takes about 7 to 10 years. If you take a look at the last recession that we have, that's back in 2008. Now in 2019, 2020, that's about, give and take about 12 years. Okay, 10 plus years, right? So that's the cycle of economy. Okay, hopefully in this webinar here, this sharing, you also understand the big picture, what's happening in the currency world, in the economic world. Okay, now this table again, if you're on your computer, your laptop, do a screenshot. If not, use your phone to take a photo as well. Okay, this is a very good summary of what I just explained to you just now. Okay, if the economy is bad, the central bank needs to come in, because if not, recession will be there. So they need to make sure we pull out of recession. So they're gonna lower their interest rate, or they're gonna print money. So when they do that, the currency value will drop, because again, if I print a lot of money, your money is everywhere, right? So nobody really starts to value it because there's so much of it, and then the value will drop. Okay, so that's the effect of it. Opposite, economy very strong, very good. Okay, central bank again needs to come in because I'm worried that it will be hyperinflation. So I increase my rate, I do tightening, and then the currency actually. Okay, so this table here summarizes that very well. Okay, so I hope so far so good. If you have any questions, keep it to yourself first during the Q&A. Then only you type it in the chat so that I can actually monitor, because right now I can't monitor all your questions. Okay, now with that, you have understand the role of a central bank. Okay, so the question now is, as a trader, right, how would I know what the central bank is gonna do next? Because if today I'm a trader, I know that, okay, the bank is gonna cut rate, then I can position myself to sell that currency, because I know if they're gonna cut rate, okay, moving forward they're gonna cut rate, then likely the currency is gonna drop, and then I can position myself to actually profit from it. So as a trader, I need to know, together with the bank, what are they gonna do? Okay, and one way to understand that is what we call economic indicators, right? They are kind of like score system. Is the economy doing well or not good? Okay, so there are tons and tons. There's many economic indicators. Over here are just some of it. Okay, of course we won't go into every one of it because I don't want to turn this into an economic class, right? But I want you to know that there are a lot of economic indicators over here. These are just some of the important ones. Okay, of course, you can head over to websites like Forex Factory. You can even go to like FX Street. Many websites available to share with you, to go and study a little bit what are all these economic indicators. Okay, so again, today's objective is not to go and teach you what each of this mean. Okay, but our focus here is you want to understand all this and then how to apply it to your trading. That's very important. Okay, so let me bring you to some of the platforms, or I would say websites, so that you can briefly understand what it is. Okay, so this one here is one of the websites that has a lot of all these global macro indicators available. Okay, it's called tradingeconomics.com. Okay, of course, I'll give you one quick example. Like if you click into like US, okay, you'll be able to see all the indicators over here in terms of like their GDP, their employment, their inflation, etc., etc. Okay, so this is one of the websites that I use personally to also understand what's happening. Of course, Forex Factory, you guys would be also quite familiar with if you have been trading some time, right? All the economy indicators you can find over here as well. Okay, and you can see this is this week one, right? So this week later on Wednesday, okay, we do have the Bank of Canadian BOC rate statement. Okay, so later I'll pass you some homework or assignment for you guys to actually practice on so that you can apply what you have learned today directly into the market. Okay, so we'll talk about that at the end of the webinar. Okay, but I want you to know that these are things that happen every time you are trading. Okay, so this week you can see there's the Bank of Canadian. Okay, later on you do have the Bank of Japan as well, and then of course later part of the week on Thursday you also have the ECB rate statement. Okay, so every about 4 to 6 weeks you do get the central bank coming and having a meeting. Okay, so that's where you need to take note of it. Okay, so over here I'll show you based on the case study, right? This is on the Fed. Okay, FOMC, okay, Federal Reserve of the US, right? So this one here, okay, each central bank would have their official website. Okay, that's where you want to go and extract that information. So over here, this is of course on the Fed. Okay, so I want to walk you through how to interpret what the central banks are meeting, what are they saying, okay, and what's their outlook? Are they gonna be bullish or are they gonna be bearish? Okay, so that's the important part. Okay, so a lot of people when they hear about this, right, they get afraid because they say that, oh, if I didn't study economy or economics in school, then how would I understand? Okay, a lot of people get fearful of that, but I want to share with you that this statement, right, is actually not difficult. Most of this statement is about like 1 page or 1.5 page. Okay, so let me give you this case study, right, so that you fully understand. It's actually very simple. Okay, so you can see over here, this is the latest one, which is September. The next is November, right? So haven't been out yet. So the latest we can work with is September. Okay, I just click into this HTML statement. Okay, it'll bring me to the page where I'll be able to see the latest FOMC statement, which is the Fed statement. Okay, now before we jump into the details of it, right? Just take a look at this text. Okay, it's only about 1 page. Okay, honestly, is not that long. Okay, and this is not only the Fed. Every central bank statement is pretty short. Okay, and your role here is really to just give it a read to understand a little bit about it, and you will actually have a much better clarity when you trade that particular currency. Okay, so let me go through. Of course, we won't read out the entire statement, but we'll just skim through a little bit, right? Now, the first paragraph over here that I highlighted, okay, actually already explain. Let me zoom in a little bit, huh? Okay, the first paragraph that I highlight over here already explain the objective, the KPI that we talk about. Okay, take a look at this. The Federal Reserve is committed, okay, to use the tools to support the US economy to do what? Number one, employment. Number two, price stability. Okay, so again, every bank would have these two objectives. Okay, and then of course over here what they talk about is they briefly describe what's happening right now. Okay, of course with COVID-19, with the lockdown, economy is going to be weak, right? So that's what they are reporting over here. Okay, and you can see over here the path of the economy will depend significantly on the cause of the virus, of course, right? If the virus gonna continue to be like that, it's gonna be continue to be locked down, can't travel, it's gonna be worse. Okay, so again over here it reports what is their KPI. Okay, so their KPI is to achieve maximum employment. More people employed, the better it is, and inflation to be at 2%, right? As what we share about. Okay, so over here, okay, so they basically just report what what their objective is. Right? Now, some keywords for you to pick up if you're very new to economics. Okay, so over here, I want you to remember this word, right? Accommodative. Okay, so the whole sentence here reads, the committee expects to maintain an accommodative stance of monetary policy. Now, this word accommodative basically means that they are in an easing policy. Okay, so easing basically means quantitative easing. They want to support the economy, they want people to spend more. So usually when the central bank says that they are in an accommodative stance, okay, or they are in an easing policy, okay, these are the keywords, right? It means that they are actually, number one, cutting interest rate, number two, printing money. Okay, so these are the keywords that you need to know. Okay, so over here they also say, right, decided to keep the target range of the Fed funds rate, which is their interest rate, at 0 to 0.25%. Okay, so what you need to know then right now, you know, right, the Federal Reserve is likely not going to increase rate in the future, okay, until maybe the pandemic is better, okay, or there's a positive sign in the pandemic. Okay, so we know, right? So if I'm a trader right now, I know that the US Central Bank, is not likely going to increase their interest rate in the short term. Then what does it mean for the dollar? Likely is going to be weakening. Okay, so that's the idea behind it. Okay, so over here, okay, a keyword for you to understand also, right? They say here, in addition, okay, the coming months, the Fed Reserve will increase its holding of treasury securities. Usually when you read something like that, what it means, okay, so I want you to pay attention. When you read something like this in terms of the keyword, okay, of holding treasury securities, it basically means they are printing money. Okay, they are printing money. So again, what it means that is gonna be bad for the US dollar. The dollar is likely gonna continue weakening. Okay, so again, you see this word here, accommodative financial conditions, right? So again, it means that they are bearish. Okay, so other than that, basically this one here is just telling you, they are still looking out on like how the economy is gonna turn out, and then they're gonna decide their policy. Okay, and then the rest of this here is basically telling you who is there to vote, who is in the meeting, and etc. Okay, so you realize that it's really not that difficult, right? We went through the entire statement. Okay, pick up a few keywords here and there, and you can understand already what the Federal Reserve is. Okay, so from there, basically, right now, okay, number one, the economy is bad. Okay, you look at all the economic indicators, it's not good. Globally, it's not doing well. Then you also now look at the central bank, specifically the US Central Bank, and you know that they are what? They are cutting interest rate, they're maintaining it at 0%. Okay, so they're not gonna increase interest rate. Number two, they are still in printing mode. They are still in quantitative easing. Okay. So with all this put together, okay, moving forward, there's a very high chance the US dollar is gonna continue weakening. Okay. So this is the part where, now that from a fundamental perspective, I know all this, then when I go and trade the US dollar related currencies, okay, I have that background information knowing that fundamentally the dollar is going to be weakened, okay, and I might want to look out for opportunities to short the dollar compared to like buying it. Okay, of course, we don't trade just based on fundamental. Okay, we need to also consider like the technical, right? Looking at charts, looking at the sentiment, and of course applying our risk management. Okay, but overall, I want you to understand that fundamental is really not that difficult, but it's very important because it gives you that confidence, that conviction to go and trade the market. Okay, so I hope so far is clear. Okay, based on this. Now let me go to another bank to also talk about it to share with you, right? Let's take a look at RBA, okay, which is the Reserve Bank of Australia. Okay, so same thing. This is the official website of them. Okay, and you can see over here, this is the statement which is released last week. Okay, no, 2 weeks ago, right? 6th of October. Click into it. Okay, to show you again how all this statement, again, take a quick glance. It's not that long, maybe 1.5 page, right? Okay, so same thing. Okay, a very quick one over here. Okay, we're gonna go slightly faster on this so that you understand. Okay, now this one again here. Okay, so the first paragraph, it says that The board decided to maintain the currency policy settings, right, including the target of cash rate, which is to them is the interest rate, okay, the yield of the government bond, which is quantitative easing, okay, and basically it's just a very summarized version of what they decided to do in that meeting, okay. This paragraph here, when you read about it, is basically reporting what's happening right now, right? So they say the global economy is gradually recovering, okay. So basically they just say that, okay, there's some positive sign towards the economy. Over here, they talk about how financial conditions remain accommodative, right? So what's the keyword? Accommodative again. What it means is that globally, okay, because they say around the world, globally it's accommodative. What does it tell you? Most of the banks are lowering interest rate, printing money. Okay, so again, once you pick up those keywords, you know what it means. Okay, so that's about it. Okay, then they say that they talk about global first, right, around the world. Then they talk about Australia economy experience a sharp contraction, right? So contraction means it's shrink. So again, it means that the economy is not good. Okay, and then of course they just go into the details of like which perspective of the market, which of the perspective of the economy is not good. But basically, it tells you right at the first line here, the economy in Australia is not good. Okay, then they talk about labor market conditions has improved a little bit, okay, and likely unemployment rate is gonna peak, right, earlier than expected. Okay, what does this tell you? It tells you that, okay, maybe there's a slight positive note to that. Okay, then they say here, even so, even with that positive note, right, unemployment are likely to remain high for an extended period. Okay, that makes sense, right? Because if economy is affected, people were gonna lose jobs, businesses are gonna forced to be closed down, right? So again, these are the things that they're reporting. Okay, so again, you see this keyword here, easing of fiscal policy. So again, easing policy, right? They are printing money, they are lowering interest rate, right? And they say here that with the Australia government budget to be announced, right, both fiscal and monetary support will be required to give to help the economy. Okay, so again, if you take a look at continue reading over here, okay, again, this part here is just talking about how the banks are doing all these things, and you know, if you take a look at all this here again, nothing much, right? Yeah, so again, last paragraph, the board is committed to do what it can to support jobs. Again, two things, right? Inflation and employment, right? To support jobs, income, businesses, and of course the idea here again, expand funding facility. Okay, so to fund they need to print. Okay, so if they are expanding that funding, they need to print more. So again, same thing. Okay, same thing. So overall, okay, round over here they also say, right, the board views addressing the high rate of unemployment is as important as a national priority. So now, if today you read this statement, right, you know the Australia Central Bank, RBA, their top priority is what? To make sure that people are being employed, because they stated here in their statement, right? The board views addressing the high rate of unemployment as an important national priority. Okay, so again, if today I'm a trader and I want to trade Australia, I know the bank is taking a very close look at the employment rate. I will also want to take a look at the employment rate. Why? Because if the employment rate starts to turn positive, that means people starts to get employed, they starts to have salary, okay, then it's a positive thing for the RBA. Maybe they will start to increase rate, and then from there, the Australia will likely strengthen again, right? So again, I can know what I want to focus as a trader because I know what the central bank is focusing on. Okay, that's why it's very important. Okay, and then of course over here they say they will maintain highly accommodative policy as long as it needs, right? It will not increase the interest rate, which is over here cash rate, right? Until progress is being made towards full employment. Okay, so again, if you don't read all this, you don't understand what the banks are looking at. You are actually trading with like, without all this information. I want you to imagine you are like driving, but you are only able to look in front, what's happening in front of you, right? You don't have your side mirrors, you don't have your rear view, you have no idea what's happening beside, you have no idea what's happening behind. You only have one view. Okay, can you trade? Yes, but will you get into more accident? Will there a higher chance of you getting into accident? The answer is yes, because you only have one perspective, right? So the idea here of fundamental is to provide you, on top of just looking at charts, okay, you want to know what is the big picture, okay, and that's where fundamental comes. Okay, so I hope so far with all this you guys are clear, right? Good. Okay, so yeah, okay, so I hope that's clear, right? We walked through two examples of case study. Okay, so I want to open up the time right now for any questions that you guys have. Okay, any questions that you guys have, all you have to do is type it in the chat. Okay, I'll be monitoring that, and from there I'll answer the questions. Look. Okay, so good. If you have any questions, now is the chance for you to ask. Okay, now is the chance for you to ask. I saw one. I saw one question over here. By Sarosh. Okay, so Sarosh is asking. Should we trade these news? Okay, now from my so what I do, right? I don't trade the news specifically. Okay, so if you're looking to trade the news specifically, that's called news trading. It's a very unique strategy to trade a very specific news. But to me, that is very short term. Okay? I don't do that, right? Because if you're trading news, it's mainly like NFP, right? So when the news release, you trade the volatility of it, and then after that you exit the trade, you close the trade. Okay, so for me, I don't do that. But when we're talking about fundamental, we are not talking about one news. Okay, we are not talking about just the NFP. We are talking about the big picture. Okay, overall, what is the central bank doing? That's a key question that you want to ask. Okay, Steve asked how this can affect in day trading. Okay, good. Okay, so to answer Steve's question, I think it's a very good question, right? So day trading, to set the common understanding of day trading, right? Because everyone understands day trading might be slightly different. Okay, so to kind of define day trading so that we can address that. Okay, to me, day trading is within the same day to enter and exit the trade. Okay, so it's more like scalping. It's more like intraday strategies, right? Now, to me, fundamental on that perspective might not be too significant to you as a day trader, but at the same time, you want to take note that on the day that you're trading, is there any specific news that is gonna affect the central bank view? Give you an example. Okay, just now we take a look at Australia, right? And we know that right now the Australia Central Bank, the RBA, they are monitoring the unemployment rate. Okay, so now let's say you are focusing on Aussie dollar, you are day trading the Australia dollar pairs. Okay, and in that week or in the day that you are trading, there's a labor data, let's say the unemployment data of Australia, okay, that is going to be released soon. What you need to then take note is, that now this data is very, very important to the RBA. It's going to be important for all the traders over there as well. So what you need to take note then is, how is this news going to affect your day trading? Do you want to avoid trading that day or even that week if, let's say, that's important? Okay, or are you gonna understand, okay, if this data is gonna come out, gonna be good, then you already know how is it gonna affect the Australia currency, how is it gonna affect the Australia Central Bank, or vice versa. Okay, so in terms of day trading, it's more towards you want to know the big picture, what are they monitoring, and when you're day trading during that week or that day, is there that specific news that the banks are monitoring? You also want to pay attention to that, right? So that's the idea behind it if you're doing it for day trade. Okay. Good question, right? So Asri Rusli asks, okay, another good question here. What is the perception and where can we read them? Okay, again, a very quick one. Okay, because every central bank, their website is slightly different, right? There's no one website that collates all of them. All you have to really do is just Google. Okay, and what you need to type in is very simple. If you're looking at like the Fed, just type in the Fed US Central Bank. Just some keywords, right? And then the first result is usually the one it is. A very obvious one is the official government website. Okay, so if you're looking at, let's say, ECB, right, you just need to type in European Central Bank. Okay, the first result is usually the official website of the central bank. Okay, so from there, that's where you assess the rate statement. Okay. Okay, Nares Naresh asks, please tell me the best strategy. Okay, there's no such thing as best strategy. Okay, because along the years that I've been trading, a lot of people are searching for the holy grail. Okay, I can tell you it doesn't exist. Okay, there's no strategy that's gonna be 100% sure win. And what works for one trader might not work for the other trader. Okay, so that's why my intention over here, my objective of running all this webinar together with OctaFX, to provide you with, like, in a buffet, right? I provide you with all the options available for you so that you can make a more informed decision as to, okay, this one I want to eat more, this one I don't like, okay, this one I like it a lot, I eat even more. Okay, the idea is this. So today you understand more about fundamental. Some of you might see that, okay, fundamental very helpful, right? It's something that you have missing out so far. It helps you to understand a little bit more into the currency market. Then by all means, okay, some of you who are short-term trading, let's say 1 minute chart trader, right? You go in, you catch 5 pips, you get out. Maybe fundamental is not your cup of tea. Okay, then it's a good to know thing, but it might not go into your strategy. Okay, so I want you to be aware of that as well. Okay, so there's no best strategy. There are people who use fundamental and make a lot of money. There are also people who don't use fundamental, but yet they can still profit from money. Okay, but the objective, or I would say, as a trader, you want to be as holistic as you can. Then only you can choose. Okay, so the idea here is today, if you have 4 items, 4 tools you can use, you can pick. But if today you only have one, then you have no choice, right? Everything that comes, you only know how to use that one. Then that's your limitation, right? So be aware of that as well. Okay, so I hope I answered that question, right? There's no best strategy. Okay, Muhammad asks, what happened when the Fed increased interest rate, and what happens to commodity like gold? Okay, now very good question, right? Since you are talking about gold, and today I specifically use the case study on the Fed. Okay, why? Because it's one of the most obvious fundamental to actually capitalize on. Okay, now if you take a look at what happened back in the past recession, which is back in 2008. Okay, 2008. So in 2008, we have the subprime mortgage crisis, right? And after the crisis happened, after the bubble of subprime mortgage bust, okay, the Fed actually went into printing a lot of money, which is exactly what it is doing right now, right? They cut rate, they print money. Right now, they also cut rate, they print money. Okay, and right now, you actually know that the Fed is printing unlimited amount of dollar. Okay, so I want you to think about it, right? Right now, maybe people haven't really, realized that because everyone is printing, okay, and no one is really taking a very close look because every bank are printing, right? But eventually, when the economy starts to pick back up a little bit, right, starts to improve a little bit, and everyone suddenly realize, oh no, there are so many dollar available in the economy right now. The value of the dollar is not worth that much. Okay, that's where the dollar is gonna weaken significantly. Okay, that happened in 2008. If you take a look at that, right, 2008 is where the bubble bust. 2009, 2010, the dollar weakened pretty significantly. Now, if you take a look at what's going to happen, likely by 2021, 2022, there's a very high chance the dollar is going to weaken very, very significantly. Okay, and why or where does gold comes in? Okay, think about this, right? Today, if you are a hedge fund, you're a fund manager, you're a big investor, the dollar is gonna weaken. Where are you gonna put your money? You need to put your money somewhere to protect against the value of it falling, right? And one of the common asset that people put in, all these fund managers, all these investors gonna put in, is your precious metal. Okay, and that itself is like gold and silver. Okay, so in the long-term picture perspective, right, putting your horizon into 2021, 2022, there's a very high chance that the gold and the silver price will rally a lot. Okay, you go and take a look back at the silver chart in 2009, 2010. Okay, and you compare it to what's happening right now, you can see that already. Okay, perhaps during the technical chart session webinar, we're gonna talk about that as well, and then we combine a little bit on fundamental and technical together. Okay, but the idea here is, of course, you talk about increased rate, right? So I'm giving you the example of right now the Fed is cutting rate. Okay, so if the Fed cuts rate, gold, silver will likely increase. Okay, and then of course vice versa, if the Fed starts to increase rate, then your gold and silver price tends to drop. Okay, so that's the answer to that. Okay, um Lord Kamukens asks, is politics in US gonna affect all the currency? Yes, in a certain way, it's definitely gonna affect. Okay, because especially during the election, right? Which is happening next week. Okay, very close already. You do realize that the stock market is affected. Okay, currency is also gonna be affected, but again, it's not gonna be like a clear direction. Okay, it's what we call volatility because people are not sure a lot of things. Okay, it's gonna be up and down, up and down. It's definitely gonna have that effect. Okay. Baron asks, any advice for beginners like us? Okay. My advice to you, right, is that if you are very new to trading, your objective is to pick up as much knowledge as you can. Okay. And hopefully, in with this four-part series webinar that we're doing with OctaFX to help you guys, okay, you'll be able to attend all four of this webinar to give yourself that holistic understanding of what trading is. Okay. So if today you're very new, then this four-part series is gonna benefit you a lot because you're gonna have that full understanding as to what is fundamental, sentiment, technical, and of course risk management. After this four webinar, then you know about all these tools and techniques to actually analyze the market. You can actually put them together as a strategy. Okay, so from there you'll be able to help you as well. Okay, Farmin asks, news that the central bank publish, how does it affect currency volatility? Some may not be significant, but some may be significant. As a trader, how do you position yourself to disadvantage? Okay, now, very good question. Okay, very good question. Now, how I do it, okay, is this. I look at the fundamentals. So right now, today, right, today case study, we look at two. Okay, so one is Fed, the second one is Australia. Okay, so I know right now, okay, Australia, the bank, they are looking at employment data. And I know the Fed is not going to increase rate anytime sooner and they are keep on printing money. Okay, so now how I can piece these two information together is today if I'm looking at Australia dollar, this currency pair, right? And I start to see sign that okay, the Australia labor data, the employment starts to see positive sign. Okay, then I have a very clear direction because Australia is likely going to be strengthened relatively to the dollar, and the dollar is going to continue printing money, right? So one strong, 1 week, I have a very clear direction that I can trade. Okay, and when we are talking about fundamental move, it's not your 10, 20 pip, 50 pip move. Okay, it will be like 500, 800, that kind of movement, right? It's gonna be like a trend. Okay, and that's the idea behind how you use fundamental, okay, to help you position yourself to look at that. Right. So for me right now, I know the dollar eventually is gonna be very weak. Okay, so how I position myself right now is I'm looking out for opportunities on gold and silver for the long term. Okay, looking into 2021, looking into 2022, and if let's say gold and silver rally by let's say from where silver is, it has a potential to go back up to $50 for silver. Okay, right now it's trading probably about 20 plus, right? So that's almost like double, 100%. Okay, so imagine if you're able to capitalize on that based on fundamental understanding. Okay, you don't need a lot of this trade, right? 1 year, if you can capitalize like a double of that, your profits is going to be very significant. Okay, so I hope that hope that explain that, right? Okay. All right. So Hassan asks, after the bank meeting, how long will it affect the currency? Okay, very good question. Okay. Now, there's no kind of like expiry or period, right? Because again, if you read into these banks that we talk about, okay, you realize that they every month they update what they are looking out for. Okay, and why are they doing this? Because they are also helping the market understand what is important. Okay, so for example, if right now the Australia bank says that I'm focusing on employment, okay, and let's say they release it on the 6th of October, and then the employment data comes in like mid-October. So within from 6th October to that mid-October, you know every traders now are monitoring this particular data called the labor employment rate. Okay, so that is where that duration of it is gonna happen. Then what happened is like November, you're gonna have a new RBA rate statement, right? And then from there, you want to monitor what is the thing that they are monitoring, what is important to them, and then you need to update yourself accordingly as well, right? So that's important. Okay. So I hope that answered your question, right? So Mr. S teacher asks, does it work if combine the news and chart pattern? Yes, obviously, right? Now today when we talk about fundamental, I want you to know why I start off with giving you a big picture, because this is one of the pillar only. You're not gonna just trade based on fundamental. You need to add on like technical, sentiment, risk management. Okay. But today we're gonna just have the time to focus on one. But I want you to know it's very important to apply technical too, because fundamental tells you the big picture, the big direction, but it doesn't tell you when to get in. Okay, you need to have your specific entry, your stop loss, your take profit, right? That is where your technical comes in, right? That's where technical is very helpful. Okay, so I hope that gives you the perspective, right? Yeah, cool. Okay, so yeah, so about Go. Okay, I'm not sure what question you would like to ask. But yes, I'm monitoring gold and silver, specifically silver, right? And I'm seeing that there's a lot of potential to the upside, okay, moving forward into 2021, 2022, okay, which means going into next year and the following year, there's huge opportunity. Okay. Varun asks how to combine this news in daily chart. Okay, we'll definitely go deeper into that when we talk about technical charts during one of the webinar. Okay, but today I want to give you a very quick one, right? To at least give you that glimpse, that preview as to what we're gonna cover. Okay, so this is the chart on the dollar index, okay, DXY. The idea over here is, of course, if I'm bearish on the fundamental perspective, I want to see a bearish chart pattern on the technical side as well. Okay, so this we're going to talk a little bit more into the technical webinar. But what I would see is if this pattern here forms something like that, okay, it tells me I have a high chance of dollar weakening from a technical point of view. Then what will happen if I combine it with fundamental? I know that fundamentally the dollar is going to be weak. The technical chart also tell me that, is the direction on the chart is down. Okay, then when I combine these two, I have a higher probability. As a trader, I have a higher confidence in executing my trade. Okay, so that's how we combine that together. Okay, I'm going to talk about that when we go into the technical charts. Okay, because today we won't have time to dive into the charts. Okay, but hope you can see that, right? Combination of it is important. Okay, okay, maybe last question, then I'll have a little bit more to share with you. Okay, before we wrap up today. The last question by Farmin, okay, asking, apart from the news from the central bank, is there any other news that can affect the currency, which we should be aware of? Okay, very very good question. Okay, now you take note. I want you to take note, right? When we talk about news, today over here when we're talking about news, we are talking about fundamental economic news. Okay, there are certain news that are not exactly the fundamental economic news. For example, suddenly because of the election between Trump and Biden, someone not happy with Trump and then decide to assassinate Trump. Okay, and then it reported in the news saying that Trump got assassinated. Okay, now that is a news, but that's not a fundamental economic news. Okay, but it's a news because it's shocking to everyone, right? So the US president right now is being assassinated. What will happen next? Nobody knows. Okay? It causes panic. Okay? That itself is what we're gonna cover in sentiment analysis. Okay? It's also a news, but it's not economic news. Okay? So there's a distinction in that, right? So the example I give you hopefully is clear enough. We're gonna dive into the details when we talk about sentiment. Okay, so I think OctaFX is gonna give you the dates of our subsequent webinar, right? I know that Thursday we have one. Then following next week again, same thing, Tuesday and Thursday. Okay. But I can't recall like Thursday is gonna be sentiment or technical. Okay, but either way, this fall webinar we're gonna cover everything. Okay, fundamental, technical, sentiment, and risk management. Okay, so the question that you asked is actually more towards sentiment. Yes, there are still news that you need to take note of, but those are not economic news. Those are like suddenly something happened in the market, everyone panic. How is it going to affect your currency? What currency is going to be affected? We're going to talk about that next webinar. Okay, good, right? So I hope so far all this is clear. Hey, Warren asks which website to read those kind of sentiment. honestly, if today you're on social media, right, that to me is a very good source of news for sentiment. Okay. But of course, you can go over to like investing.com, any particular financial news you'll be able to look up for, right? So in Malaysia, your newspaper, your news website, news portal, those are all information that you can look up for. Okay, when we talk about sentiment, I will share with you a little bit more specific as to what news you need to pay attention to. Okay, not all, okay, not all, but we'll share a bit more into details when we talk about sentiment. Okay, good. Now I want to, I need to pick one of you to be like the winner of your fan pack, right? So let me do a very quick check over here, and then I'll share with you a little bit more before we wrap up today. Okay, okay, maybe for okay, so what you need to do is this, right? For the winner, okay, you need to write into OctaFX, drop them an email. There's a moderator here as well, so they know who you are. Okay, you need to give them some details so that they can mail you the fan pack. Okay, so for today, of course, a lot of good questions, but again, I need to choose one, right? I need to choose one. It will be Farmin 101. Okay, the question on the part where you ask about how it's affecting this currency volatility, and how do I position myself as a trader, right? To me, I thought that was a very good question because it ties into the application part of things. Okay, so for you, what you need to do is write into OctaFX, okay, and let them know your particulars details so they can send you that fan pack. Okay, now before we wrap up today, okay, I hope again you guys have learned quite a bit, give you a different insights to understanding what fundamental is. Okay, now OctaFX has already set up a Telegram group, okay, for all of you guys who are here with us in this webinar series. Okay, they will send you a link as well, I think, to your email. Okay, all you have to do perhaps is to click that link. You'll be able to direct yourself to this Telegram group. I'm also in the group. Okay, and the idea here is this group is of course used to kind of like maybe answer some of the questions that you guys have. Okay, and you have a little kind of like homework. Okay, I think this is very important so that whatever you acquire and learn today is not put to waste. Okay, I want you to put that into practice, and we want to make it very practical. Okay, so tomorrow, which is Wednesday, right? Tomorrow, the BOC rate statement is going to be released. Okay, and what I want you all to do is go and read that rate statement when it's being released. Okay, and after reading it, very straightforward. The application here is, as a trader, after you read and understand this statement, what is your fundamental bias? Very simply, okay. So for example, right now today we look at the US Fed and the RBA, right? So my bias on the US Fed, I think you guys are very clear already. I'm bearish on the US Fed, okay. And then if I look at the Australia, of course, right now we are also bearish, but I know that I want to pay attention to the Australia employment data. Okay, so the Fed has nothing specific. I only know that okay, they are bearish, right? Long term bearish. But for the Australia, while they are bearish, they are specifically looking for employment. Okay, so when you read the BOC rate statement, I want you to apply it. Okay, what we covered today. Establish your fundamental bias. Are they bearish, bullish, and what are some of the important things that perhaps they mentioned that you want to pay very close attention to? Okay, and all you have to do is come back to this YouTube video over here, okay, and then post your answer in the comments below this particular video on YouTube, okay, and so OctaFX is gonna pick the winner, and you will have a gift as well. Okay, so this task is to encourage you to really apply what you have learned today, so you don't put into waste. Okay, application is very, very important. Good. Okay, so that's all from me today. I hope it's clear for you guys. Again, my objective, my role here is to make it as simple yet at the same time, not losing the essence of it, so that even people, maybe some of you are very new to trading, can fully understand the importance of. Okay, so that's all from me. Okay, so again, join the Telegram group. Okay, you can of course ask questions over there as well. Okay, so with that, the next episode that we're gonna have is actually on Thursday. Okay, so do your homework on Wednesday, and then Thursday we'll come back again. And I'm gonna share with you, right, same timing at 9 p.m. Okay, so with that, really great to have you guys, and I'll see you on Thursday. Right, bye bye.